Welcome back to Degens Journal, the only place where crypto news isn't just headlines, it's alpha. Are you watching the markets or actually understanding them? If you're here for Bitcoin signals, altcoin moves, and the institutional plays before they hit mainstream, you're in the right place. Today's lineup is 5 major stories moving the crypto needle right now. Let's break it down. Bitcoin surges as Trump says the US-China trade deal is done. Could Solana hit $300? Odds of a spot ETF approval just spiked. Polygon shakes up leadership. Sandeep Nailwal becomes CEO of the foundation. Analysts warn, Bitcoin may stall, but Ethereum could take the spotlight. Stablecoins go corporate interest from Fortune 500 executives has tripled. Let's dive in. News number 1. Bitcoin and US-China deal. Bitcoin is edging closer to a new all-time high, and one of the main drivers is something far beyond the blockchain geopolitics. On Wednesday, former US President Donald Trump posted a striking update on Truth Social, claiming that the long-anticipated trade agreement between the United States and China is essentially finalized. His exact words, "Our deal with China is done pending final approval from President Xi and myself. We get 55% of the tariffs, China gets 10%. The relationship is excellent." This announcement caught global markets by surprise. Why? Because for years, the US-China trade war has been a major source of uncertainty not just for traditional markets, but for crypto as well. Tariff hikes, supply chain disruptions, and political tension have created an environment where investors flock to risk-off assets. But when major powers strike deals, capital flows tend to shift, and Bitcoin, once seen as volatile, is increasingly viewed as a hedge against macro instability. Traders and institutions alike are now positioning for a potential post-deal rally, where renewed global cooperation could boost appetite for high-performing alternative assets, especially BTC. And here's something interesting. Historically, Bitcoin has often rallied during or after key geopolitical easing events, especially when they lead to a weaker dollar or stronger emerging markets. With the dollar potentially softening on improved trade conditions, BTC could benefit in 2 ways: more global liquidity and reduced investor anxiety. So, the big question is, if this US-China deal goes through, are we about to see Bitcoin enter a whole new bullish phase? Or is this just a temporary relief pump? Let us know what you think in the comments. News number 2. Solana ETF odds and $300 target. Solana is making waves again, and this time, it's not just retail hype. We're seeing a coordinated surge across multiple fronts. In the past 24 hours, SOL is up over 4%, currently trading at $165. That's still well below its all-time high of $294. But the momentum is undeniable. So what's fueling this rally? First, ETF fever is spreading. Analysts now place the odds of a spot Solana ETF approval at a staggering 91%, a number that would have seemed absurd just months ago. The increasing regulatory clarity and growing interest from asset managers have pushed Solana into the spotlight. At the same time, open interest in SOL futures just reached $7.54 billion. Only 12% below its January peak. That's not just traders betting on price action. That's heavy institutional positioning, signaling long-term confidence in Solana's ecosystem. But let's dig deeper. Solana is one of the few chains that's not only fast and cheap, but also showing strong on-chain growth, especially in DeFi and NFTs. It's regaining credibility after the FTX collapse, and institutions are paying attention. A successful ETF approval could trigger mass inflows, just like we've seen with Bitcoin and Ethereum ETFs. And when you combine that with already rising leverage in derivatives markets, the setup is there for a potential breakout. Of course, high open interest also means higher volatility, so while $300 might be in sight, the road there could be bumpy. So here's the question. Will a Solana ETF push SOL past $300? Or are we heading toward an over-leveraged correction first? Drop your take in the comments. News number 3. Polygon Foundation gets a CEO. Polygon just made a major leadership move and it could reshape its future. Sandeep Nailwal, one of the project's co-founders, has been named the first official CEO of the Polygon Foundation. This is a sharp turn from Polygon's earlier philosophy of decentralized governance, which had no formal centralized executive roles. So, why the change? According to Nailwall, it's all about speed and focus. In his own words, it's time to move fast, aggressively, and with conviction. Polygon had spent the last few years building infrastructure, recruiting talent, and researching cutting-edge tech like zero-knowledge proofs. But in the process, it may have lost momentum in a rapidly evolving Layer 2 market. Rivals like Optimism, Arbitrum, and Base are moving fast, and the competition for Ethereum scalability is only heating up. This leadership shift appears to be a direct response to that pressure. But here's the challenge. Polygon's native token, POL, is still down more than 80% from its all-time high. Investor confidence hasn't yet followed the tech roadmap. Appointing a CEO could help streamline decision-making, boost ecosystem coordination, and send a signal to institutions that Polygon is ready to play at a higher level. But skeptics argue that this might be more of a strategic reshuffle than a real catalyst, especially if fundamentals don't catch up. So the big question is, can new leadership reignite momentum for Polygon, or is the market looking for results, not just titles? Let us know what you think below. News number 4. Bitcoin cools, Ethereum gains steam. Bitcoin might be hitting a short-term ceiling, and Ethereum could be quietly setting up for a comeback. According to Brian Quinlivan from Santiment, on-chain data is flashing red flags. The market is showing signs of overconfidence, with too many retail traders convinced that BTC is destined to break all-time highs any minute now. But historically, when sentiment becomes this one-sided, it often signals a local top. In fact, some long-term holders, the so-called smart money, have started to offload positions, taking profits while the excitement builds. Meanwhile, Ethereum is starting to attract fresh attention. Developers are gearing up for key upgrades like proto-danksharding, which could significantly reduce gas fees and improve scalability, making Ethereum more competitive with faster chains. At the same time, the ETF narrative around ETH hasn't gone away. With the SEC recently approving the 19B4 filings for several spot Ethereum ETFs, the market is now waiting for final S1 approvals. That regulatory tailwind could be huge. Add to that a recent uptick in developer activity, whale accumulation, and rising open interest in ETH options, and Ethereum might be preparing for a breakout while Bitcoin takes a breather. So the big question is, could Ethereum flip the script in Q3 and steal the spotlight from BTC? Drop your thoughts in the comments, we want to hear from you. News number 5. Fortune 500 Eyes Street stablecoins. Stablecoins might be entering their corporate era. According to Coinbase's latest State of Crypto report, nearly 30% of Fortune 500 executives now say they're exploring or already using stablecoins in their business operations. That's a massive jump from just 8% last year, a more than 3x increase in interest in only 12 months. So what's driving this surge? Executives point to two main pain points: slow transaction speeds with traditional banking systems, high fees for cross-border payments and settlement delays. Stablecoins, especially those like USDC on Solana or USDT on Tron, offer fast, cheap, programmable payments that settle 24/7 with full transparency. Here's the real kicker. 7% of those companies are already holding or using stablecoins today. They're not waiting for regulation to catch up, they're already integrating stablecoins into treasury operations, supplier payments, and even payroll experiments. This shift suggests that stablecoins may be on the verge of becoming default financial infrastructure, not just for crypto-native companies, but for the global corporate elite. If stablecoin adoption continues at this pace, we may soon see the financial rails of tomorrow being built not by banks, but by blockchains. So, are stablecoins about to become the preferred payment layer for global enterprises? Let us know what you think. So what do you think? Is Solana the next ETF breakout? Will Ethereum flip Bitcoin in Q3? Or are Fortune 500 companies the ones leading the real crypto revolution? Drop your thoughts in the comments and include the word inflection if you made it this far. We read them all. And if you got value from today's update, smash that like button, subscribe, and ring the bell so you never miss the alpha. This is Degens Journal. See you in the next one.